Can you guys see it? You guys see my screen? Where did the chat box go out though? Okay, perfect. All right. So let me know if you guys can see it. Just want to make sure. That way I can start. Okay, good. So gold, I took longs in these areas, basically on the move up. Okay. Now, the thing about gold is we had this massive sell-off, okay, from these highs. Now, a lot of people they end up trying to catch the extremes, like over here or here, and they end up getting a bunch of losses because, I mean, look, let's say you want to look at it in terms of, oh, there's an LB right here, taking out liquidity over here, et cetera, et cetera. Now, what people do is while it's like falling off a cliff, people start buying in these areas, taking a bunch of L's. And that is something that I would say stay away from. Okay. So, uh, can one of you guys mute your mic? I'm not sure who's talking. How do I mute everyone? Oh, Corinna, can you mute yourself, please? All right. Perfect. Okay. So, a couple of things. We've taken out the high over here. Okay. Taken out the high. So we've taken out the liquidity and then we had that sell off. Okay. So there's a difference between it respecting the highs and then selling off, and then obviously taking the liquidity and then selling off. Okay. So we get this sell off in these areas when it's selling off. I don't like to start buying because there's an area over here. I can start marking out this as well. There's a bunch of areas I can start marking up. And essentially what that does is you're trying to pinpoint the low when it's having a massive sell-off. That's the worst thing you can do ever. Okay. So what I like to do in this scenario is let it print the low. Obviously, this was past PA. But yeah, same thing goes here, right? We've taken out the low over here. We get this little bit of reactions over here. I'm not involving myself with gold at that time, right? I'm staying away from it. I'm gonna look at a different pair, just stay away from it just so like I can not take that out. You know what I'm saying? Because at the end of the day, I'm not in the market to try to catch the bottom. Like, it is just you don't have too much longevity doing that. Yeah, you might catch 1-2 trades that look amazing on the charts, but realistically, your bank balance will say otherwise. All right, so we print a low here, we move lower, we print another low. Okay. So now gold is, I'd say, a little more interesting in my eyes, right? Then we get this move up, taking out these highs. Okay, Prince and LB. This is obviously you guys, I'm pretty sure you guys already know this price action. We come into this LB, respect it, take out the low, then we come and we're building liquidity. Okay, that's the main part. We built liquidity. Yes, we're able to trade again away from there. Looking at the lower time frames. However, let's go to more recent PA, which is in this area. So we got to ask ourselves what happened. Okay. We had, sorry. We had that BOS. Okay. Inducing buyers. We take out the lows after, sweeping the lows, inducing sellers. But what do we do in this area? That's what we got to ask ourselves. This high didn't sweep the liquidity, right? This high over here as well, it respected the high. So that tells us that there's liquidity above. Okay. That's number one. Number two is, sorry, guys. Number two is higher time frame lows have just now been swept. Okay, we've taken out the lows to the left on the higher time frames, okay, which is the 4-hour in this case. So automatically, as soon as these higher time frame lows are gone, I am no longer looking for sells. Okay, no longer looking for sells unless it's an engineered liquidity sell. Okay. However, I don't like catching sells as soon as these higher time frame lows are gone. So if it does, let's say gold did take out this high and sell off, that's not something I want to involve myself in, right? Because we've taken out higher time frame lows, et cetera, et cetera. I'd like to stay away in that scenario. Now, if I go to the hourly time frame, understanding we've just swept the higher time frame lows, now I'm not going to start buying or spamming buys in these areas, right? Because I need to kind of build myself that narrative. Because yes, higher time frame lows were swept, and I do see liquidity above here, okay? And I would like to trade towards there, but I need the other time frames to start aligning with the higher time frame, right? So the 15-minute or the 15-minute time frame, for example, I would need that to align with the hourly or the 4-hour. That way I can kind of not convince myself, but at least the market is convincing me that price is ready to move to the upside. Okay. So what did we do? We moved to the upside. Okay. We have taken out these highs. Okay. So now, because we've taken out those highs, automatically in this scenario, right? In this scenario right here, I am no longer, sorry. After these highs are swept, I'm no longer trying to catch buys here because I understand that, we've just taken out highs. We've induced buyers. Okay. So if buyers are induced, I need buyers to be trapped as well. Right. Now, I wouldn't be taking any higher time frame longs towards here. If I was to take longs or whatever, it would be, to be honest, I wouldn't even catch longs in these areas. I would rather maybe catch a sell there. I think I did catch a sell there, but regardless, the point is, because we've taken out these highs, my eyes are drawn towards these lows. Okay. Now, doesn't mean I start selling right away. Okay. I don't start selling right away towards these lows just because the highs were taken out. Right. Because I understand what we talked about earlier. The higher time frame lows were swept. So the only way I can catch a sell if it's an engineered liquidity sell. Okay. So we get gold reacting from these highs after taking out these highs. Okay. A massive sell-off that occurred. 1 second. Okay, boom. We get that massive sell-off that occurred. I believe it was FOMC that day as well. Now, what is kind of trippy or was trippy for me at the time was some of the feeds, okay? Because I'm using Owanda. Some of the other feeds, like I believe it was FXCM or I don't know what other feeds people are looking at, but the lows were swept, okay? Or maybe those futures, I can't remember. But nonetheless, the lows were swept on some of the feeds, and on this one it wasn't. So I was a little I'd say sketched out about it. Okay. Okay, let me quickly go over that sell I took in this area. I was trading Asia. I don't normally trade Asia, but I was surprisingly on the chart that time. Okay. We have go on 15 just to open up price action. All right. Sold off from the highs. Okay. We can clearly see we're creating, some bearish PA. We come into this area, right? And there's a couple things that I like to think before I frame my trade, right? I got to ask myself a couple of questions like, what is retail looking at right now? Right? What do they want to see, et cetera, et cetera. So we come into these lows. So let me just draw a box right there. Okay. And we get that reaction from the low. All right. We get that reaction. On the 15-minute, you can clearly see we've taken out the high. Okay. So what does that do to me, or what does that tell me about retail? Okay. What that tells me is not only do we have that break of structure to the upside, right, on the hourly, okay, for retail to get induced, or the average retail trader to get induced, we've come into the lows. So they're quote unquote POI area. Okay. We've had that reaction, another break of structure. So they kind of got their confirmation for buys now, right? So in this scenario, I'm a little interested in sells. Okay. Now I'm not going to sell right away, obviously. However, let's go on the 5-minute. If you look at it on the 5, you'll see price kind of told me otherwise, right? We've reacted from here. We built liquidity there. Let me just put a little money emoji right here. We built some liquidity, moved to the upside, right? Broke structure, etc. Now, I understand any reactions from here should ultimately be false, right? It should ultimately just be price building liquidity. Now, can it long from here and go all the way back to the upside? Possible, right? So I kind of have to frame what I see. Now, on the 5-minute, I see that we have taken out this low right here. So remember, this high that was taken out, okay, it was clearly visible on the 15. So we understand buyers are induced, okay? Now, I need the lower time frames to align with that as well, right? That way I can start taking the trade, right? Because if the lower time frames don't align, then I can't take it. So on the 5, you can see we get this move down. We've trapped some sort of buyers in this area, but obviously buyers liquidity is ultimately here. Okay. Now we've induced sellers as well. Okay. So taking out this low induces sellers on the lower time frames. All right. So I'm not interested in any sells, right? This high I'm going to view as a trap. Now price moves back to the upside, taking out the highs. Okay. So now I understand not only do we break structure here, but we also respected the low. Okay. We respected this low first. And then we respected this low over here, this area. We moved to the upside. And now I'm a little more interested in sells. Okay. Again, I'm not selling from this high right away, right? I would rather it print a liquidity block for me so I can use it as a stop loss placement. Now, let me just use replay real quick. All right. So if I go to the 1-minute time frame in this area, something clean actually happened. All right. We had price move to the downside. We've come into, this area right here. Okay. We're building liquidity. So we understand why price should ultimately go to the downside. All right. We build liquidity. We also did this internally. Okay. So now that I have an LB, right, I have a place to put my stop. Now, in terms of entries, right, the only way I can take an entry is if we get that trap. Okay. So where do we get that trap? If you guys can see it, you know what? I'll wait like 2 seconds. Just want you guys to see it. You don't have to say it. Just look at it. And frame it out in your mind, and then I'll give you the answer right after. All right. So what do? We came into a low, we pinned to this high, okay? And then we moved lower. Moving lower, what do we do in this area? Boom. Break of structure. Okay. Now let's say the impatient retail trader is going to view this as a break of structure, and they're going to try, let's say, selling, right? Simple. What happens? They get trapped, right? So I need to see a trap into my liquidity block. All right. This is exactly where I get the trap. Okay. So this right here would be the entry. However, I didn't enter there because that wasn't actually on the chart at the time. I hopped on around
video.
9.
I'll just
All right.
download that. Yeah.
1 second. I'm just gonna mute everyone. And if you guys have questions, just type it for now, okay? And then I'll open up the talking stage later. All right. So this is an entry for sells. All right. So this is the most optimal area to sell from. Right here. Why? Because we've not only created the LB. First, we've actually framed our trade. Okay. We understand what our direction is, where the liquidity is, why we want price there. Okay. After that, we've created that LB and we're building more liquidity as well as that trap that happened. Okay. This right here. That right there is important for me, right? If I see that, that gives me my entry criteria. All right. As for stop loss placement, if you're to enter here, for your stop loss above here. All right. Same thing goes for this too. Let's say you weren't on the charts, okay? And you didn't see, or let's say you hopped on the charts and the price was down here. In this scenario, right? A lot of people, what they like to do is they wait for that pullback and they just enter like this. Okay, and I've seen this many times in the group where people just take it like that towards here. Now, yes, it played out, but there are cases where because this low was swept, when we got an LB, sometimes price likes to induce higher. All right. Sometimes it likes to do this and then drop. All right. So let's say you did miss this entry and price comes all the way back. And let's say you wanted to enter somewhere here. Okay. Your stop loss still has to go in right here in that area. All right. Right above that liquidity block, because this right here is not, I'd say, too probable. Okay. And the reason is because taking out lows, right? So even though it's internal, sometimes it can induce higher. Okay. That's one of the cases. So, obviously take that towards the lows. Now, in this scenario, I took the trade a lot later because I missed my entry, right? I wasn't on the charts. I hopped on around right here. Okay. Around this time right here. That's when I hopped on the chart. When I hopped on, I seen this. Okay. I understood that we had, okay. We had that break of structure. Okay. Inducing buyers. Okay. So once buyers are induced, if we look at it structurally, this is the low and this is the high, right? So if anyone is trying to buy, they're ultimately going to put their stop losses below here. All right. Also, let's say the ones that got in here for buys right here, they have their stop loss below here. All right. Now, price is moving to the downside. All I need to see is the lows respected. Okay. In this scenario, look at that. Lows still got respected. Okay. Yes, we did take out this low. No. Right? But now we're coming into where the liquidity is. All right. And we have some internal highs right there. Okay. So all I did was wait for this to go. I should sell here. Now, putting your stop loss here is the safest option. Okay, that right there, safest option for the sells, right? Keeping your stop loss right there. Me, I was a little bit, my bad. I was a little bit what's it called? Riskier for this play because I didn't really want to be on the chart for too long. I said, okay, I'm gonna risk a little bit, not too much. I didn't even risk my original amount, how much I usually risk. I risked very little on this move, because my stop loss was here. Okay, and honestly, if it stopped me out, I would have just called it a day. I don't usually hop on during Asia, right? I was on, I looked at it, I seen it, was like, okay, this looks pretty clean. I'll take it, right? If I was to put my stop loss here, I understand that, there is a possibility of it coming here, a little bit of reactions, come back higher, come for this, and then do all that. And I really did not want to be on the chart. So I just put it here and I said, it's an LB, makes sense why I'm taking it. We have that trap because ultimately I need to see an LB. I need to see that trap, right? Low taken, high taken trap, right? Now, when I said if you were entering here, right? Why did I say to put your stop loss here and not here? Okay. And the reason is because look at this move down, right? It's just a bearish move, right? We don't see any internal highs being built, okay? Whereas here, we can clearly see a slowdown of price, okay? So that ultimately just looks like this. We built liquidity, took it out, right? This right here is a lot more different than this right here, all right? So took the trade and I targeted, what did I target? Yeah, I targeted here for a partial. And then I set a TP at this low. All right. And I'm more aggressive to managing my position in these scenarios because it's a counter bias move. All right. It's a counter bias move. And that's why I'm very aggressive with my management. As soon as the lows were gone right here, I took partials and I went break even. So if price decided, right, to respect these lows once more, and let's say come into here and then sell off, I get stopped out break even, right? And I don't care because I understand it's a counter bias move. I'm not trying to catch the move in these areas, right? What I like to do is wait for the pro bias move. Now, this was clean on the lower time frames and I framed out the whole direction. That's why I decided to take that. All right. Now, we come lower and it is a little trippy. We've taken out this low, but respected the low to the left. All right. On Owanda, at least. I don't know about the other feeds, but I know someone telling me, or I remember someone telling me that some of the other feeds were different. All right, so that was the sell that I took on gold. Now let me get off of replay and we'll talk about the buys. All right, so the buy scenario, okay? We moved to the upside. We've respected this low, okay? So also, we've taken out the highs again. All right, so we've taken out the highs. However, we're still respecting this area right here. All right. Now that tells me that we're building liquidity there. All right. Doesn't mean I start buying right away. Still need to convince myself that the buy is ready, right? Or let the market kind of convince me. Now, we're building liquidity here, but we also built liquidity here. Or at least on a wind up. Okay. Now, in this scenario, once we do get this sell-off, okay, and we take out these lows, Do I start buying here? Is the question. Do I start buying there? I wouldn't, right? And the reason is because I have two different directions in my head. Okay. Once price has taken this out, I'm thinking there's two possible things that can happen, right? We can easily respect these highs, sell off, take out the lows, and then move back to the upside. Okay. There's also the case that it can long from here, right? So if it can do either or in my head, right? I'm not trying to catch it. I'll stay away, right? It's fine for me. I'm not trying to be involved in every single move, right? So we do get the sell off. We built liquidity, okay? We've taken out the lows now. Like I said, I'm not buying here, okay? However, once price prints the low, okay, and moves away, now it tells me something else. It's a little different now, right? So what ends up happening is we print the low, we move away. Now, I was actually taking a look at this in the beginning. Right. This is what kind of gave me that confidence that longs were gonna occur. Boom. We respected the low. I don't know if you guys can see it, but what did we do here? What did we do? Guys, if you guys want to exactly. Right there. POS. That tells me everything now, right? Buyers induced. All right. Buyers are induced. Trap. And what do we also do? Respected the highs. All right. So that tells me now buyers were just induced. We've built liquidity at the highs and we just trapped buyers. Okay. Now, because like I said, there's a possibility of it still shorting, right? I would rather let it print the low for me and then I'll catch the continuations when it comes. Now, what ended up happening was, I believe this was, our own London. We started moving to the upside. What do we do? Came into the highs. Boom. If we're going to 15, you'll see it. What do we do here, guys? Came into the highs, right? It's always the same thing, okay? We've come into the highs after taking out the lows, okay? We've induced sellers and then just came into, let's say, retail sellers POI, okay? What does that tell me? Sellers are induced. They want to start selling here, okay? Or if they're not selling there, they're waiting for that break of structure for their confirmation, right? What ends up happening? Take out the lows and we induce more sellers, okay? So all they really want is a pullback and then that sell off. Simple. So what ends up happening is boom, right? And then in this area, if you go to, say, was it on the 5 or the 1? Okay, you can see on the 5. Look at this. We just had that sell off, okay? There's a high that's respecting, building liquidity there. What do we do here, guys? What did we do? Actually, let's go on the 1 minute for this, so I can open it up and show you guys. Okay, now on the 1 minute, you can clearly see printed a low, printed a high, a higher low, and then we got that higher high. All right. Or you can even say here, but regardless, overall, it's respecting this high. Okay, we're building liquidity above now. All right. Same thing goes with the lower time frames. I need to see the exact same thing. We build liquidity. Okay. At these highs, I also need a trap. Okay. I need buyers to be induced in the trap. Where were buyers induced? Right there. Right. Comes here. Boom. Respects it, builds some sort of liquidity, and then traps the buyers. That was my entry. All right. My entry was there, and I targeted the highs. Now, in this scenario, because it's a pro bias move, right? I'm not so aggressive with managing it. Now, what do I do? I'm targeting these highs right here. Doesn't mean I'm going to hold full position, though. I am obviously going to pay myself. And yeah, so took the entry there. I had, I believe it was right here. Yeah. Partial. Okay. Partialed above here. And yeah, I held the rest towards the highs. Now, I'm not gonna lie to you guys. I was kind of sitting here thinking, okay, I'm gonna get stopped out break even in this at this point, right? Price moved higher, took out the highs, right? I understand buyers are now induced, meaning I'm not gonna buy here anymore. Okay. But since I'm in the buy position, I want to be break even. All right. So what ends up happening? We get that pullback. We respect the lows. Okay. So that's telling me that now we're building some sort of liquidity at the lows. So it could come for that in the future, right? Or it could come for it right away. Now, I am no longer interested in the buys, at least in this area right here. Okay. Now, what ends up happening is we move to the upside. Okay. Taking out highs right there. Look at this. Boom. Well. Take a look at this. LB. Okay. Will I sell from here? I don't, right? I don't sell from there, but it is nice to see, right? We got the LB. We've trapped the sellers, selling. I mean, so yeah, trapped the sellers, selling off. Now, we have done a couple of things, all right? Potential LB can respect from. Nothing clean, so I'm not going to be taking any entries down here, all right? Because honestly, it can come for all this, right? So in this scenario, I'm going to wait. I'm not trying to buy here because I'm not interested. Now, what ends up happening is we print the low, okay? So we've swept some sort of liquidity. Boom. Print a low. So now that tells me this is an LB. All right. Now we move to the upside. But if you look at it, what do? We just took out the liquidity. All right. So am I going to buy here? No. Right. I'd rather it prints another LB. Boom. Takes out the low. Induces higher. Right. Look what it does. We build liquidity at these lows. All right. Right there. We come from these highs, lower. What are we respecting? Respecting that low. Okay. We're building liquidity now below here. Move higher. Coming to these highs. Okay. And what do? If we get this like a very aggressive move down, right? I'm not interested in buying, right? I'm really not. Because there's still liquidity in these areas, right? So for that reason, I would wait. Okay. Now, what ends up happening? We get this type of PA, and that's what I like. I like to see that because now I understand that it's moving to the downside, but it's building liquidity at the highs. All right. So now it's giving me a little bit more confidence in the longs. All right. And what else do we do? If I go on the 5, just gonna come into this area. What do we do before we take out the lows? Over here, we come into the lows, we move away, we take out some internal, okay, inducing more buyers, and then we trap the buyers. Right, that right there is important for me. Okay, once I see buyers get induced, we not only do we just build liquidity here, we also respected liquidity, moved away, took out highs, induced buyers. Now I just need buyers to be trapped, right? Where buyers trapped? Oh, right here. Right there. That is another entry. Boom. And then stop loss below the LB. All right, it's very simple. Just trap and then LB, right? So I need to obviously frame the direction, which I've already done for the week, right? I need to see buyers trapped every time I want to buy, right? Because I don't want to be buying with retail. So I need to see them trapped. What happens? We come into the lows, we build liquidity there. We come into the lows, we get this right there. That's all I need, right? We get that, we induce buyers, we trap them. Trap is there, we have an LB. So everything I need to take the trade is there. That's another entry that I took. And I targeted the highs over here. All right, guys. You guys following? All right. So that was the trades, the 2 trades I took. Or to be honest, 3, because I took this short as well. Those were the trades I took on gold for the week. I framed it exactly like that. Now in these, like I said, there's certain areas that I don't look at. Okay. Certain areas that I stay away from. And I do that because at the end of the day, I don't need to catch every single entry. Okay. Because I know when I do catch an entry, it's money at the end of the day. Right. And if I was trying to catch every single damn entry on gold, then I'll just be taking a bunch of L's. Right. For example, when let's say gold is selling off, all right. So move to the downside, selling off, et cetera, et cetera. And we have a lot of people, because I've seen this many times in the group. A lot of people try catching the longs while it's falling off a cliff, you know, and they might take a couple L's before they catch that winning trade. Okay. And what that ends up doing is, like, let's say, I don't know, you have a 100K account and you're risking about 0.5%. And let's say we've swept out lows. You know, we're trying to catch buys here. You'll be catching an L here. You might catch another L somewhere here. You know, it's just falling off and you're trying to catch the buys, right? And you're going to take a bunch of L's before you catch the move. Okay. Now, if you're down, like, let's say 1.5% or 2%, okay, you're down 2%, and then you finally catch that winning trade, you're not going to even manage it properly because you just taken 4 L's or 3 L's, right? So not only are you not going to manage it properly, you're going to be very emotional too, right? Number 3, you have to make back the loss, right? That's what you're going to be thinking, and be like, okay, I'm down, I need to make back this loss, right? Maybe you make it back and you close it all because you made it back. But now you made no profit, right? And then because you did that, you're going to do it again in the future. And then, yeah, let's say you don't close and then it decides to induce lower, catch another L, right? That's how people end up going on tilt. So certain areas I would stay away from. If you're unsure, okay, if if you're unsure of direction, if you're unsure of where price needs to go, or let's say you have two different biases in your head, right? Just stay away from the chart. Go to look at a different chart. Come back to it when it's clear, right? For example, some people caught sells here, right? Not something I normally do, but I understand why it's going to sell off there. But I'm staying away, right? Here, you can catch buys there if you want. But I'm staying away because at that time, I had two different biases in my head, right? I thought, okay, it can go lower, but it can also go higher, right? So if I think two things can happen, why would I trade? Right? That's why I always ask myself. And that's how I stay away from catching every single move because I don't need to at the end of the day. Catch one or two trades, especially on gold. It moves. So one or two trades will literally make up your entire week's L's or months, you know? So pretty much that's look at all this PA. Let's see. 12 days. I took 3 trades on gold. So that just goes to tell you that, you don't need to be involved in every single move, especially when you're unsure of direction. Just let the market tell you where it's gonna go. Once you have the clarity, it's so much easier to trade. But yeah, that's about it. If you guys have any questions, now you can unmute yourself. You can talk and ask me questions, or you could just type it up if you don't feel comfortable talking. Any questions? Ask me anything. Whether like it doesn't even have to be about this trade. It could be anything. Just ask away. Don't be shy, guys. It's just me. No worries, Adam. Do you always wait for a breakout from an H1 or H4 high before looking for lower time frame? Because I focus more on, let's say, the higher time frame moves. I do, right? I look for the highs and lows to be printed on the H1 or the H4. Before I can frame myself an idea of where price is going, right? Like if we've taken out highs over here, okay? When price is up here, I'm not trying to catch anything, okay? And yes, it's taking out the highs. We're all-time high, so it's a different story. But yeah, once these lows are gone, like I said, yes, I wait for that higher time frame low to be taken out, but I kind of need the lower time frames to align as well, right? Are you using swing account X30 or a day trade account? Steven, I no longer trade prop firms. I just trade my personal capital now. But when I did trade prop firms, I'm not gonna lie to you, I was not doing swing trading. I used to do intraday trades. So like I'll be in a trade, I'll close out very early. And yeah. Hamza, what do you mean by aggressive entry if you don't mind? I don't think you asked the question. Oh, brother, for me it's very difficult to track down liquidity and follow its lower time frame. I want to see how you see a higher time frame. Obviously, it comes with time and patience, right? The more work you put in, et cetera, et cetera. I just look at it in terms of where retail is looking to enter, right? So I like to follow structure to kind of give me an idea of where retail wants to enter, right? So, like for example, we've taken out lows. Okay, what does that tell me? What does that tell me? That tells me we've just induced sellers, right? But I still see liquidity here. Okay, we've respected this low. Once highs and lows are respected, right? I see there's some form of liquidity there. right? So I have to frame my trades based off of where liquidity is, basically where highs and lows are respected, where buyers and sellers are getting induced, et cetera, et cetera. Alexis, aren't you, or I think I pronounced it right. Sorry if I didn't. Aren't you looking for a setup every day? Yes, right. Not like every single day, but yeah, pretty much. I have a bunch of pairs, right? I'm not only looking at gold. I have a bunch of different pairs I look at. So if I look at gold, like yes, I've taken only 3 trades in the past 12 days on gold, but there's still other pairs that I can look at, right? What do you look when you want to enter without waiting for confirmation? The only way, well, to be honest, it's the same thing, right? It's I need to see a trap into the LB. So if I'm not waiting for a confirmation on the lower time frames, like let me give you an example. This example, okay? On the hourly, you can see it. We've respected highs. We get that sell off. We got an LB right here. And then look at this. High taken, buyers induced. Low taken, buyers trapped. Right? So same thing. I still need to see buyers or sellers trapped. So if I'm buying, I need to see buyers trapped and I need to see an LB. Okay. Same thing goes for sells. If I want to sell, I need to see sellers trapped and an LB, right? So once sellers are trapped or buyers are trapped, that gives me the entry, and the LB, the liquidity block, gives me a place to essentially put my stop loss. But yeah, now if I want to take a confirmation entry on the lower time frames in this area, once we have, sorry, taken out the lows and trapped the buyers, and we've tapped into the LB, I need to see the exact same thing happen on the lower time frames, right? Like for example, this one right here. If there was an LB here, okay, if let's say we had price print the low, take it out, move the way, and we had an LB here, then I can take direct entries, right? But because there was no LB there, and the only LB I see is, and not even the cleanest one, I have to wait for lower time frames, right? And what did I do on the lower time frames? Same thing. If I go back on it, you'll see it. Where's it at? Okay, we've taken out the lows. We printed an LB. And same thing, right? Trap. Induced. Trapped. All right. Okay. What else is there? Why are you looking at CFDs and not futures since futures are the real prices? Um, because I can't really trade futures personals. Like I can do prop firms, but I can't do futures personals for religious reasons. So yeah, that's why I have to stick to CFDs, unfortunately. But not really unfortunately. I mean, at the end of the day, I still make money. So Gustavo, hi, how are you? Thanks for doing this for us. Person taken. It means it has to go down to get that liquidity. Okay, so this is why it's important to frame out the higher time frame, right? And understand where price needs to go. So a lot of people, and I hope no one did this, but we have liquidity here. All right. But the higher time frame tells me this. Taking out lows, we've just done this as well, right? We've induced a lot of sellers and we have a lot of liquidity here too. So once this liquidity is taken, I'm not surprised if it just continues going to the upside. Okay. Yeah, we might get some reactions like we did here. Right. Oh my God. Right here. that move right there. But I'm not surprised if it just continues going to the upside, right? Because I understand higher time frame wise, we have a lot of liquidity here and we've induced sellers, right? So I would stay away from selling in that scenario because there's different liquidity points it can come to, right? Just like how I said right here, when it's falling off a cliff, I don't want to be buying, right? It's just like it's like you trying to catch a falling knife. Now, same thing goes for this right here. If you're trying to sell, it's moving to the upside, and if you're trying to sell, it's like I don't know. It's not something I would be doing. All right, could you please explain EU and GU as well? Yes, I can go over it real quick. I live in Australia, the London Open, midnight. Should I bite the bullet and join the New York session with you guys or keep trying to catch trades in London? What would you do? To be honest, I'll go about it in whatever best fits your schedule, right? You live in Australia, so I understand you're literally living on the other side of the world. And Australia's all alone on the map. But yeah, um, let's see. New York is midnight and it doesn't align with your sleep schedule. I would stick to London because you have to understand. I trade New York now, right? But before, when I first started, I used to actually trade London, and I used to sleep during New York, which made absolutely no sense because I live in Toronto. But um, yeah, I was trading London at the time, and I still did pretty well because New York and London is just the sessions just move a little. Like there's volatility. That's the main part, right? If there's volatility, I can trade. There's no volatility, I can't trade. Like gold during Asia, there is some volatility, so I can trade that. But like, um, if there's no volatility, I don't like trading it. It's just building liquidity, et cetera, et cetera. Now, uh, you need to go with whatever fits your schedule because at the end of the day, you still have a life, right? You still like, yes, I know everyone's trying to, you know, get towards profitability, but the more steps you skip, the longer it takes, you know? Like I know it's very, I think, cliche to say, but the faster you try becoming profitable, the slower you're gonna be, right? Because you're gonna be skipping steps, you're gonna be, not um like there's gonna be a lot of things you're gonna overlook, et cetera, et cetera. So you always gotta remember, like, yes, we're all I mean, everyone starts off at, let's say, some sort of bad financial situation and they're trying to get out of it, et cetera, et cetera. But to be honest, trading is the way it is. It's very hard to be profitable if you have um financial struggles, right? Because you're not going to be thinking clearly. Because unfortunately, in trading, your psychology has to be really good. Okay. There are going to be days where you can have an off day, right? But if you're constantly thinking about your bills and all that, you're gonna do your head in. Every single day, you're gonna be coming on the charts. You're gonna say, I have to make money. If I don't, I can't pay that bill. And then you're gonna end up screwing yourself, right? That's what ends up happening all the time. When I hop on the charts, I don't really care to make money. Like I know it's weird to say, but I just hop on to take a trade. I literally forget about the whole money aspect of it. And that's like my best way of kind of going about it because I mean, I like being delusional, but yeah. All right, do you place alerts on the chart or do you stay in front of it? I place alerts. I can't stay in front of the chart for too long. I have like minor ADHD. I can't just sit down and look at charts all day. Even right now, I'm like swinging side to side. But yeah, Hamza, Akhi, thanks. Allah bless you. Thank you, brother. He doesn't have to deal with consistency rule. Yeah, exactly, Elijah. Consistency rule. God damn. Great webinar explanation. Thank you very much. I was okay. Thank you for joining. Thank you for paying attention. Thank you for learning. This is recorded, by the way, so you can rewatch it. Thanks, Avid. All right. So if you guys don't have any questions, I'm gonna wrap it up here. Yeah, that was a whole hour. Okay. See you guys whenever. Yeah, if I do another webinar, then I'll see you then. If not, then no, I mean I'll see you guys in the group basically. All right, guys. Have a nice rest of your day.